All right. Hello, everyone. We're back with Cash to Capital. Today, we're going to talk about four stocks that 52-week low, and if it's a buy or value trap. And what else you got to say?
One of the things we do here at Cash to Capital, slow and simple. Simple means you look at the 52-week high, look at the 52-week low. What does the 52-week low means? It means over 52 weeks, this is the lowest point of a stock on that 52-week period. A lot of people use the 52-week high as a ceiling for good stocks, because a 52-week high, that's sort of, if you break an all-time high or a 52-week high, that represents a stock that has kind of moved too fast or gone too high. So we're looking at the opposite end of this, where we're looking at the 52-week low. Usually quality companies, sometimes you don't, because again, these technicals, they stay true to form. If a stock's on a 52-week high and that's called that they're bearish, and then they start to move bullish, it really doesn't matter the fundamentals of the stock. If the technical showing that they're moving bullish, that stock's going to move bullish. So you got to pay attention. So we got a couple. I got a couple, two stocks I want you to look at, and Maddox has two stocks on the 52-week low, with some good PE, with some good value. Again, we keep it simple: PE ratio, valuation. That's what we look at. So 52-week low, and what's the PE ratio? So we got some decent plays for you.
I mean, it's the same thing. I mean, people look at a 50-week low as a good buying opportunity, but it'll also be indicator if a stock is sold off, if the valuation has come down,
That's right.
but it'll also be indicator of value trap as well. So that's
Very
why
true.
it's important. Look at that indicator.
You want me to go first? All right, guys. Okay. So the two stocks I have for you, all right, well, 52-week lows that I want you to take a look at. Comcast, ticker symbol CMCSA. Okay. It's one of the most undervalued large caps right now, looking at a PE ratio of roughly 4.64, guys. Okay. So this is significantly lower than the broader market, and estimates the price to fair value at 0.68, suggesting it is roughly 32% undervalued. Okay. Let's say that again. 32% undervalued. Look at that PE ratio of 4, forward PE ratio of 7. Guys, this stock is dirt cheap. All right, dirt cheap. Now, there's been a lot of like rumblings in this area, of different cable companies being bought and things like that. We look at value. The value of this company is screaming cheap. Okay, CMCSA. All right, let's look at the last, Maddie, if you could. Let's look at the year-to-date chart, YTD, all right? And if we could, can we look at the year, 1 year, right next to it? So it's just been trending down from 37 all the way down to 29, all right? And we think, do you guys see that little hump right here around the it was no, but yeah, no, go further, the hump down the bottom, on the bottom. Go left, 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 right there. That little hump right there, that little U shape, a lot of people could look at that as like this is the stock where it's flattened and now it's starting to move back up. Okay, that little consolidation period there, right? That little U shape there, a little cup, we call it a cup, where the stock has said, you know what? I'm tired of going down and we're going to start to come back up, because these valuations are super cheap. All right. So look at Comcast as a 52-week play, super cheap. Analysts are saying buy on it, low beta. I really like this stock. All right. If you're looking to get into the market and you don't know what to get, look at Comcast. Okay, guys. Should I talk about my second one?
I can go next. Next, we're looking at PayPal, and PayPal is trading at historically low multiples at 11 PE and a 10 forward PE. So definitely looks like attractive valuation. But there's one thing I want to look at. If you look at their chart, this is their chart all the time, and it looks like exactly like this market cycle chart that some people might
Oh,
have
check
seen.
that out. You.
Huh?
I said, look at you, son.
Yeah.
Bringing back
So
the Wall Street cheat sheet.
yeah. So yeah, some people might have seen this chart, and this is the market cycle chart for the entire market, and it looks pretty much identical to PayPal's chart all the time.
Yeah, look at that.
So that is somewhat concerning. Year to date down 3%, and then the past year they're down 36. So this stock's been kind of just getting hammered, and it's due to a couple of things. It's due to slowing growth. So if you look at their financials, revenue growth has slowed down, which is concerning investors. They went from growing at 18% to 8%, now 4% year over year, and then also market share from them being taken by Apple Pay and products like Stripe. So it is slightly concerning for me. Even though it is a forward PE of 10, I don't think it's a good stock to buy. So I think I'll consider this a value trap. But if you do hold on to it, I think if it pulls back a little bit more, it might not be a bad idea to add to your position.
PayPal's falling out of favor so much. It used to be a darling in the fintech space, and like you said, you showed that Wall Street chart. I remember when it went up to like 300, people were super excited about it. Fintech, technology, and everybody has PayPal, which using for payment. And now there's been so many payment processors and people who use different payment companies that PayPal's sort of fallen out of favor. Only thing I would say, I like the stock analysis you've done. Only thing I would say is look for a technical breakout if it starts to move from bullish to bearish to bullish, but it hasn't happened yet, and we haven't seen a a period or a cup in the stock where it has bottomed. It goes up, it comes back down. It's really just been sort of hanging out down at this level. I would just keep my eye on it, but like Maddox, I wouldn't jump into it right now.
For sure. And which one you got next?
Sirius XM Radio, SIRI. All right. Um, Really, really good stock. If you look at that chart, baby, that consolidation makes me want to do the Birdman hand rub. All right. That consolidation usually means good stock, good things for a stock, usually means a stock is bottom. Guys, look at the PE ratio. Okay. PE ratio of 7. Look at the forward PE ratio, which is even lower than the current PE ratio, 6. This is dirt cheap, guys. All right. We talked about Comcast. Now we're talking about Sirius satellite radio. A lot of people, use Sirius in their cars and stuff like that. But I think on a technical standpoint, this is a stock that I like. Look at the 1 year, Maddie, if you could. All right. Stock's been coming down from 26, but usually has been kind of range bound a little bit there. I definitely like this stock. If you just want to look at keeping things slow and simple, I like SIRI on a fundamental basis and also on a technical basis. All right. So 2 stocks, Comcast and Sirius Satellite Radio, down from the 52-week high, down from the 52-week high to their 52-week low. Super cheap. That's what we want here, guys. Slow and simple, super cheap. Sirius Satellite Radio, Comcast. All right. Yeah.
Yeah, 100%.
Claps
Yeah,
for
100%.
claps for that.
No, we're not clapping for that.
Yo, what the fuck? This nigga.
But yeah, I think Sirius XM, grew up hearing them on the radio, so definitely very nostalgic. Not a stock I would hold, but I definitely think is at a very attractive valuation right now.
Oh, also, I forgot. It's got a dividend yield. What's the dividend
Mhm.
yield? I think a 5% dividend yield as well
Yeah,
that they paid out. Yeah, dividend yield 5.27%. I just saw that. My gosh. Not only are you getting the value, but you're also getting the dividend. So, guys, the dividend too. I didn't even mention the dividend. This stock right here, low valuation and the 5% dividend. Shit. Yo, I get the claps for this one, kid.
I clap for that. Yeah,
All right, what you got, son?
yeah. All right, moving on. We got Adobe.
You gotta have the claps on deck, bro. You take the claps, it'll take you like 5
Yeah.
claps. I get the claps, I'll be like, come on, famo.
All
Yeah.
right, moving on. We got Adobe. So right now it's at 300, hovering a little bit above the 52-week low of 288. Adobe's known mostly for their software, so mainly like After Effects, Photoshop, Premiere Pro, but they have other stuff other than that. And some of the reasons why they're down so much is because competition from other AI companies, competition from Canva, and especially now with like ChatGPT, Gemini, you could edit pictures, you could create pictures with one prompt, so people aren't really using Adobe like that. But if you look at their financials, Adobe's historically a growth company. So even though they're growing at double digits still, their growth has slowed. So when a growth company's growth slows, it definitely causes concern from investors, and that's part of the reason why they slow down so much. Um, but I think Adobe is a good buy. I think if it goes below 300 or it goes below 280 in that 280 range, I think that's a good buying opportunity. Or if you have it now, if it goes below 290, I think that's a good buying opportunity. But I think, Adobe is so integrated, a lot of companies and a lot of universities use their products. So it's kind of hard to switch off of them. And, they still have AI capabilities. So I still think, there's potential.
Interesting. Adobe, like I would think they would be an AI play. So many people use them, like you said. I still use them at my job. Just a really, really like so many things you could do with Adobe. Like you said, Canva has jumped up and been a big competitor. Canva's dope. And I got to read more into why Adobe has not embraced AI. I seen that they have AI on their website, but maybe it's just not attractive to investors at this time. So they just have to keep innovating. I love the PE ratio there, and also I love the forward PE ratio. And this stock has really, I thought was like a was running in the past 10 years like a Mag 7 stock. So, like you said, still double digit growth, but has slowed down. So I'd keep my eye on it. That chart looks really good for bearish to bullish reversal. So I keep my eye on that as well. I'd like to see it get past that 304 level and then see, maybe I'll do some more technical analysis and see where what resistance is there after that. But definitely something to look forward at. Slow and simple, fair valuation, 52-week low.
100%. So yeah, definitely be on the lookout for Adobe. But yeah, that's pretty much it for this video, unless you have a secret stock.
52-week low, guys. Keep them in your mind. Slow and simple here. Low PE ratio, low forward PE ratio. Valuation is everything. Serious, guys. 5% dividend yield, too. Ooh, super dirt cheap and a 5% yield. Yo.
Yeah. So yeah, definitely definitely keep these stocks on your radar, and we'll see you guys next time.
Peace.